We are back. Want to answer some of your questions now. Joe Terranova, come to you first from John in Florida. What about gold? Still see upside?
Scott, I know you're a fan of the Yankee legend, so I'm going to talk about Babe Ruth to Mickey Mantle. That's 3 to 7. That's the percentage of your portfolio that should be in gold right now. I'm in gold right now. We're in a deflationary environment, but yet the Federal Reserve is doing what they should be doing. 2 words, print it. So we don't know what the outcome of that is going to be, inflationary, deflationary. That's why ownership is gold is warranted right now.
That's 3 to 7. You're talking numbers, jersey numbers?
You got it. Babe Ruth, Mickey Mantle, your favorite players, Yankees.
Just making sure that the rest of the public knew what you were trying to say. So let's go to Jim Lebenthal from Joe in New York. Rank these 3 sectors to invest in: airlines, banks, oil companies.
Okay, a lot in that question. Let's at the top of the list is banks at this price. We know the Federal Reserve has the banking systems back. After that, look, Scott, I think you know I'm a believer in airlines, right? And the main reason is the government isn't just lending to the airlines, it's giving them grants, it's giving them a preferred status. The third one, though, is tricky: energy. Look, you have to be an active investor in energy. You can't just go out and buy the XLE or the XOP. And I recommend staying at the top of the food chain, the super major integrated oils, where the balance sheets are strong. They can cut CapEx and hopefully sustain their dividends.
Let me ask you this. What if I came back to you and I said neither, none of these groups are the place you want to put money into right now?
Yeah,
how would you respond to that?
So it's a different question. I mean, let's just acknowledge that the first one was ranking, but I understand the question.
It's a totally different question.
Yeah.
But what I'm saying is that would you recommend that people put money into any of these 3 sectors today?
So here's the answer. Banks are a yes. Airlines, look, you can take it in small doses in the barbell approach that I and others have spoken about. You have to have your high-quality names offsetting that. It has to be in a portfolio. So whether that's Apple or Intel, those have to offset the risk of a very more speculative sector, which is airlines. And by the way, airlines only, not resorts, not gaming stocks, not hotels. And on energy, I just have to state it again. I've been consistent on this. Stay away from the small and mid-cap E&P companies. They're really dangerous. Stay away from offshore drillers. Stay away from the oil field service companies when nobody's drilling right now. Only the super major integrated oils, please.
Because you're leaving me with the words I'm remembering most out of your comments there. Stay away. Stay away.
Yeah, look, there is risk. I mean, that's how you get
no
reward.
kidding. That's why I'm saying
risk.
If you eliminate every place to invest in that space, why would I even waste the time in trying to be too clever and creative and figuring out where to go in that space? I might as well just look somewhere else. That's my point.
Listen, it's a fair point, and my only comment is, yes, there is risk if you take it smartly, and I'm being specific about where to take it. There is reward as well.
I appreciate it, Jim. I'm just giving you a hard time. Stephanie,
it's all good. All good.
In case you didn't figure that out. Stephanie Link, I come back to you from Brandon in Orrville, Ohio. Which financial stock should I own right now?
Well, I talked about it at the beginning of the show. Wells Fargo is the one that I've actually been adding to, and I was adding to it a couple of weeks ago when it yielded 8%. It's now yielding 6.7%, which means the stock has gone up. I like it because it's a story stock. You have a new CEO. He's bringing in very strong talent. There's cost cutting. There's a lot they can do to restructure. But if you want one that's already kind of proven, if you will, Bank of America has done an amazing job throughout this downturn, communicating to the public, communicating to their clients and to their customers. They have an aggressive cost cutting program, which they have executed on, and it finally yields 3.1%. This has always kind of had a laggard in terms of the yield relative to the group. So that's the one you can add if you want like a proven winner, the turnaround story as well.
All right, got you. Lastly, John, to you from Eli in Pennsylvania. I'm a young investor, he says, looking for a relatively cheap company with a good upside for a covered call. What would you suggest?
Well, Scott, just very quickly, you and I talked about Apple a minute ago. I looked out 30 days into the future. Those at the money 65 calls, those are the 265 calls, trading for almost $15, Scott. I defy you to find a better company than Apple that gives you that kind of yield over a 30-day period. I wrote those myself today against the Apple shares that I own at least partly I own and sold those calls. So $15 means you're protected down to $250 on this particular trade. I love covered rights, and I think this is a way to do them.
All right, good stuff. John, thank you for that. Thank you, everybody, as well.